inflation, which people expect to fall off a cliff, doesn't fall off a cliff as fast or as meaningfully as people want. And so I will explain inflation as 3 different chapters, and we've seen the first 2 chapters play out. So 2021, chapter 1 was all about energy inflation. And, we all talked about having almost $10 gas at the pump and what does it mean for everybody, and it caused that initial spike in inflation. And then we had it come off, and Sachs called this. He said, we're going to have this sort of double hump. And 2022 was really the story of goods inflation, right? All these prices and all of these things went up because the input costs went up, and we all had to bear the implications of that. But then that started to ebb. Now, if you looked at the tail end of 2022, what I found super interesting was the number of articles I saw about wage inflation. Whether that was Biden using an 1800s era law to prevent a railroad strike, the number of states that increased minimum wage, the trend around unionization. So in general, my thought is that the pendulum is swinging very markedly away from capital and towards labor. And as the labor participation rate stays low and continues to go down, and also it's compounded by an unemployment rate that may go up, right? It's going to be harder and harder to get people to do the work you need at the company you have unless you pay them more. And if that gets exaggerated, then inflation will stay where it is. It won't be as muted and it won't fall off a cliff as people want.
It'll be persistent.
That's my big contrarian wager for this year, is that we see wage inflation that keeps inflation not going down as much as people want.
Here's what I think is going to happen this year. My big prediction is based on, I think the world has too much debt. I think that the economic slowdown coupled with rising interest rates globally and a dearth of kind of asset capital inflows means that there's going to be a lot of issues with a number of debt markets around the world, particularly kind of emerging sovereign debt. Just to give you guys a sense, global debt is about $235 trillion in public and private. That's somewhere between $5 and $15 trillion of interest payments a year, depending on what net rate is on $96 trillion global GDP. And there's another $1.5 trillion of unfunded liabilities in the U.S. and pensions and Social Security and all this other stuff. I think this is the year where a lot of the debt markets start to unravel. The entity that steps in to try and support these unwinding moments is the IMF. And I think that no matter what the IMF does, they're going to look bad. It's sort of like Jerome Powell this past year, right? Like, you raised rates too late, you raise rates too quickly. No matter what you do, it has some adverse effect and impact. It's either inflationary or it impacts growth. And so I think the IMF is going to get a lot of heat for either acting not fast enough or acting too aggressively and causing inflation as a bunch of these markets face credit risk this year. So my big bet is the IMF is going to play a major role, and we're going to be talking a lot about the IMF later this year. I think as a result, the IMF will get a lot of heat and you'll end up seeing a lot of pressure and political, just like we blame NATO, just like we blame Jerome Powell and the Fed, we'll end up blaming the IMF for a bunch of problems that'll arise. But the natural physics of what's going on is the world has too much debt and not enough growth to cover the debt, the cost of debt. That's it. As you guys know, there's been a big shift in capital allocation. A lot of the folks who were writing big checks into growth rounds are retreating back to writing smaller checks in seed and A rounds. They don't want to write the $20 million Series B. They want to write the $5 million seed and A round. No one wants to kind of follow the valuation. No one wants to set the valuation for these growth businesses, particularly if after this round, you need another big round of capital and no one's sure if someone's going to be waiting on the other end. As a result, we're seeing tons of these businesses run into capital infusion walls. They can't pivot. I think we'll see what we saw in the dot-com bubble, where 99.5% of these companies actually die. The 0.5% that we are going to emerge as the next $100 billion enterprises, the Googles and the Amazons of the world. So there will be light at the end of the tunnel for the winners. But generally, there are hundreds of companies in hardware, in SynBio, in biotech, in high-growth enterprise software that require significant sales investment expense. A lot of these businesses where the capital-intensive nature of the business just doesn't have the market for it right now, and investors are all retreating and they're going to be selective. So,
okay, Sachs, biggest business loser for 2023.
Well, I just, by the way, 100% agree with what Freeberg said, but my biggest loser for business in 23 is the consumer. I just don't understand how the consumer isn't going to finally tap out in this economy. I mean, they have a mountain of personal debt, credit card debts at all-time highs. I think the average credit card rate hit 19.6% last week and is expected to rise even further. The mortgage rates are above 7% now, so forget about trying to buy a new home or sell your home. And your stock portfolio is down too, and now layoffs are starting to pile up. So I just don't understand how we're going to avoid a recession. And you saw, Kashkari saying that the Fed's going to keep raising 5.4% is his prediction. I don't understand how, if rates are at 5.5%, that doesn't finally break the back of this economy and we go into a recession.
Do you think, Sachs, that the economy is actually broken right now? We just don't have the data because the data lags 60 days in most people's minds? Because it does feel like the consumer is and real estate has just broken at this very moment.
It seems like it. I mean, the pain is very unequal, right? But in the tech industry, we've been in a recession for a year. I mean, like the growth stocks are down 80%. What Friedberg said is true. No one's going to fund these, high burning companies. There's an enormous amount of retooling that has to happen. Mm-hmm. Look, I think the recession is here. It's just very unequally distributed. Exactly.
But the people that really get screwed, as Jason said, are the common shareholders, because eventually those converts deals that do get done, those people will end up owning the company. The cap table gets completely flushed and reset, and the employees get wiped out.
Yeah, they're wiped.
People that do all the work get fucked, and the people that do none of the work and who just want to maintain this shell game gets to basically live another day.
White-collar workers with no hard skills, Twitter going down to, I think, Elon said a couple of hundred people is all you need to run Twitter, and I think he said he has 2,000 employees or something like that. He has shown everybody, hey, listen, the more can be done with less. These things are overstaffed in a massive way. I think white-collar workers now, the idea that you're going to have 4 offers and you're going to be able to play them off each other is over. White-collar workers, aka surplus elites, people who actually, are mid-managers who don't actually code or don't actually build a product or sell a product, don't actually do real work, as I think many people would frame it in the managerial class or the CEO class. Man, they're going to have a hard time. And this week, Amazon, Andy, cut 18,000 white-collar workers, not the blue-collar, the white-collar workers in Amazon. That was a big turning point. And Benioff, he does not like to lay people off. He considers Salesforce a family. He laid off 8,000.
And that's a wrap, folks. Hopefully you turn your pennies into pounds and your cents into cents. Remember, when it comes to managing your money, it's not about being rich. It's about being smart. So until next time, keep counting those dollars and stay financially fabulous. And hey, if you're feeling extra generous, maybe leave a comment too.